Hi, this is Anthony with TradingETFs.com. Today is May 31st, 2020, and we wanted to do a supporting video to the chart that we posted here on Hewlett Packard Enterprises. Now, this is not the same as Hewlett Packard as far as the computer division, but this is more of a software-related enterprise. You can see here we're using a daily chart. We saw the stock go down to about 760 in March, and if you notice here, we've been pretty much going sideways in a range of between, let's say, $9 and let's say $10.50 or so. And I also made a mark here. Let's assume that price goes and tests the 200-day moving average. That would be a pretty nice return of about 38%. So there's good upside here. And the reason why we're highlighting this stock is that if you set a stop loss, let's say right around $9.15, or even you can also go down to the $9 range. It's about a 7% decline. So you've got a defined risk to the downside, and you've got a very good potential reward to the upside. So that's why we're highlighting this this stock here. If we move, or let's go to the oscillator. The long-term oscillator, you can see here, has been moving up. It's just below the zero line. We do expect it to cross above the zero line. But let's go ahead now and move the oscillator up to the top chart. And so now you can kind of see that even though the price has been going sideways, our oscillator has been increasing to the upside. Now, when I say increasing, I want to put this in perspective. This red line here is the zero line, and you can see that over on the left side of this chart. But the zero line is, or excuse me, the zero line is just a measurement of zero. So anything below the zero line is actually a negative. So right now the oscillator is sitting at a negative 0.005. So when I say momentum has been increasing, it really means that negative momentum here was extreme, and then it's less negative as it's rising. But you can see here that once the momentum to the downside starts to decline, then you eventually get to a point where you start going positive once we break above the zero line. And that's what our expectation is at this point. So if we don't cross above the zero line, then you've got a potential stop loss. And if we do cross above the zero line, then we would expect price to not only clear this $10.50 level right in here, but once we do, then you can see a pretty big move back to the upside, potentially testing that 200-day moving average. The timing is always not easy to predict or project out, but it's a good risk to reward at this point to where, if it takes a couple weeks to get there, then it's not a long time to have to wait to be able to see whether this is going to work out as a trade or not. So we just wanted to give just a little bit more explanation into why we've added HPE to the list of stocks that you can take a look at. So if you have any questions, certainly let us know. Thanks very much. Have a great day. Stay safe.